Hey everybody, this is Jose Blasco. How are you everyone? We're about to get started. Let's have a quick sound check. A quick hello on the chat box would do for me to understand that you hear me. That sound is good and we are ready to begin. So please go ahead, 20 seconds to go. Type a quick hello on the chat box as a confirmation that sound is good so we can start on time, everyone. Thank you so much. Thank you so much, Tony. This is appreciated. We are about to begin. By the way, I didn't turn on the video stream. Let me put myself here in the bottom right corner. How are you, everybody? Good to see you. Ready to get started with the session. Of course, today is Martin Luther King Day, so we'll see what we find in the marketplace. It's not like it's going to be a normal day. But in any case, the markets are there, like it said in the movie Wall Street, money never sleeps. So let's take a look at those markets and let's identify some opportunities. Before we start, I have a disclaimer to highlight, so you guys read it carefully. Please don't skip it. Please read it carefully. Every word is important. It's not too long, so please don't skip it. And again, this is trading. Capital is involved, risk is involved, it's real risk. It is not a joke, and it's important that all of you are aware of what is it that we have in our hands. Of course, some of you are experienced traders and you know this very well, but especially for the ones of you that are newer to the marketplace, it is important that you understand the risks involved before you start trading, especially if it's real money, okay? And if it's paper money or demo accounts, still important, because if you practice the bad habits, the day you start with real money, you will have bad habits, okay? So let's not build any bad habit. Very good, everybody. So ready to get started. We have our TradesTation ready here. And as always, all sessions is that it doesn't matter if today it's going to be a more active day or less active day, more volatile or less volatile. I just had something flying in my room. It doesn't matter what it's going to be. The process for us is still the same. We just follow the process, and the end result is either we got a go ahead or we got a no go. And that's it. It's quite simple in the end. We actually, traders, know that our job is to discard trades more often than when we accept them. Okay, this is normally the sign of a trader who is doing a good job at looking for quality instead of looking for quantity. Nothing wrong with quantity, but only if quality is there. Okay, because if not, basically you end up a very valuable customer of your brokers, but it doesn't necessarily translate in good trading results in your account. So the idea is to find a balance. The quality and the quantity is ideal, but we don't always find it, okay? So we are going to be picky. Let's put it this way. So what do we have here? We have on the left, okay, especially for the ones of you that are newer to the sessions, on the left, we have futures markets. On the top, we got markets that identify 15-minute climates, in the middle 60-minute climates, and if you look down, 240-minute climates. So all those opportunities are opportunities that potentially represent intraday opportunities. But while they are all intraday opportunities, some of them are very quick, maybe 10, 20, 1 hour trade, 10, 20 minutes or 1 hour trade, I meant to say. In the middle with the 60-minute climates, maybe we are talking about 2, 3, 5 hour trades, and then with the 240-minute climates, we are talking about intraday trades, but now we may be talking about a whole day or maybe even a day and a half. So again, from more active to less active, from top to bottom, that's what I got on my radar screen. Also, notice that because we want to be more active with the markets on the top, notice that my list is shorter compared to the markets in the middle, where we are okay being a bit less active, but then I do have more markets. Why is that? Again, for the ones of you that are newer to the session, you need to understand that more active means more trades, means lesser distance from entry to stops. Therefore, it means that slippage could be the source of bigger problems. Where if you are trading out of larger time frames, the distance from entry to stop is wider, and therefore, even though a bit of slippage may not hurt that much, but if you are trading very small time frames and you get slippage on top of that, it may totally distort your reward to risk ratio, where you thought your trade was 2 to 1, and then the trade is 0.7 to 1, just because you got slippage when stopped out. Okay, so it's important to understand that the more active you want to be, the more liquid you want your markets. And in this sense, because again, talking about quality and quantity, because quality and quantity normally go inverse, we are looking for very good quality of liquidity, and therefore the list is shorter compared to the list in the middle, which is still liquid, but less liquid compared to the list on the top. Okay, so that's why you will see the list on the very bottom to be the longest, the list in the middle to be intermediate size, and the list on the top to be the shortest, which is where we like to execute most of our trades, especially when we do the YouTube sessions, because we meet for 45 minutes. And during those 45 minutes, my intention today, I'm taking it easy. I'm taking more time than normal to explain all of this, since today is a different day than normal with a holiday. But my point is that we like to be active with a 15-minute time frame in these YouTube sessions, because since we only have 45 minutes to do the trades, so we better take active trades, and hopefully we can get 1, 2, maybe 3 trades in a session. Normally it's 1 or 2, sometimes none. It depends on the market. But certainly, if I was to look for 4-hour climate trades, so now, yeah, we may identify a few, but we may not get filled until 3 hours later, and 3 hours later, the YouTube session is over. Okay, so you will see me practicing most of the time with the setups that I find from the top part of my list. But know that when it comes to practice purposes and your development and your trading, you could certainly apply the same process, the same steps, the same method that I apply to the 15-minute time frame climate. You could apply it to the markets below if your trading style is a bit more passive, or you have to be a bit more passive because maybe you trade and work at the same time, and you trade from the office or things like that. Okay, cool. With all of this said, let me zoom in again and freeze the screen. And now we're going to be focusing on the climates that we find on the 15-minute time frame. And when looking at the climates, we want to, again, approve and discard climates. And notice that every time we got the word hopeful in here, well, I think the word says it all. It's certainly something we don't want to take. Where when we have the word sensible, it is certainly something that we want to take. Okay, we don't want to be hopeful when we trade. We want to execute sensible trades where odds are in our favor. So, you will want to discard the ones that are hopeful, focus on the ones that are sensible. Okay. Having said that, there are a couple more things. The gray boxes on the left represent climates which are not confirmed. Notice that the color is not either blue, is not either green, red either. So no red, no blue, is gray. What does that mean? It means that there is not enough evidence to understand that we got a statistical edge by trading in a specific direction. The climate is not confirmed, and therefore the typical action is to not to trade. And in this sense, even though those opportunities are sensible, we got the climate invalidating them because of the gray boxes. Okay. Now, again, those gray boxes are not there forever. In 15 minutes time or less, they will be updated because the climate updates every 15 minutes, and this gray color may change to blue or red, and now we have permission to trade. But at this moment in time, we don't, and that leaves us, if I was to remove some of my drawings, so that leaves us only with the 2 rows on the top, which are near and sensible, and they have a color on the climate here, and therefore crude oil and gold are the 2 markets that we're going to start the day with, looking to identify valid trading opportunities to execute. For now, is the only 2 markets where we got permission to continue the process. The other markets may be good to trade a bit later in the day, but not now. Okay. By the way, I didn't talk about the word near. Okay, because here we got sensible too, right? But we don't have the word near. So you may say, what about this one? Well, again, you could certainly go ahead and look at the S&P. Nothing wrong with looking at the S&P, but you may need to wait more time to take the trade because price is not near to what a potential entry would be. Therefore, you have more waiting time, and nothing wrong with waiting, but you need to understand that all that waiting time may also represent a change of climate, meaning that right now you see the climate is blue, and now you wait, and next thing you know, when you're ready to take the trade, the climate went from blue to red, and now not only you cannot take the trade, actually you need to trade in the opposite direction. So this could happen, okay, and therefore it is a smart thing to do to focus on the golden alerts, which are highlighted because the word near is there, because those opportunities not only meet the rules, but on top of that, price is near to what a potential entry would be, and therefore it's less wasted time, and on top of that, which is more efficiency, but also on top of that, less probability for a climate change that invalidates a plan, and therefore again has us waste our time. Okay, so it's certainly a good thing to look for efficiency. So I'm going to be looking at crude oil and the gold contract both in the 15-minute time frame. So I'm just going to open my workspaces, and while I'm doing that, I will also bring to the main screen. By the way, how are you guys? I'm just I didn't say hi to everyone, isn't it? How are you, Jerry, Sandeep? Good to see you all, my friends. So I'm gonna bring to the main screen barchart.com. Again, not that you need to. Let me log in. This is a free website, okay? So you don't need to be logged in. You don't need to be subscribed either. I mean, being subscribed removes the ads, so that's a nice thing, but you don't need to. And the reason why I'm coming here is because this website is going to allow me to check the right symbols to be traded. And that's especially important when trading commodities such as gold or crude oil, because those futures markets often have expiration dates which are sometimes as close as every month. And if you were to use the wrong symbol, next thing you know, you get the wrong price points for the trades, which basically puts you in a position where if you make a profit, you just got lucky. Okay, and we don't like that. We like to rely on the right market information. So let's start with gold, which is the GC contract, which is metals. So I'm going to be looking at gold, and I'm going to click on GC. And the moment I do that, bar chart is suggesting to use the G contract. But before we validate that, I always like to look at what is the greatest volume in open interest, okay, which is located in that row. Notice that open interest here is growing a lot, okay, but not there yet, not 235, it's still 229, and certainly volume is still much lesser than 113. So the row I have highlighted is the one, and that is indeed the G, okay? So when trading gold, we're going to use the G contract, which means that on the chart, I need to have at GCG21, which is the symbol I have, so I'm ready to begin. Now, barchart.com may not give you the right symbol. Sometimes it happens, okay? So let's see what happens with crude oil. We're gonna do the same process. So I'm gonna click on energies, look at crude oil. And the moment I look at crude oil, so this website is suggesting the H is the right symbol. We see clearly that this is the row with the greatest volume and open interest. And when I look left, in this case, is H. Okay, so yeah, so in this case, barchart.com agrees with the letter on the top and the volume and the open interest, but I don't have the right symbol on the chart, so I'm going to change it very quickly. And now I'm ready to trade crude oil as everything reloads. Cool. Okay, so let's go for it, my friends. So what do we have? Okay, so let's begin with the planning of the trade. Okay, so we have here with AutoClimate, we could see that we are in a confirmed down climate. It's confirmed because it's tick, it's down because it's red, and this is candle number 1 out of what statistics suggest would be 5 or 6 candles moving to the downside. So this climate could easily last 5 to 6 candles going down. That's an hour 15 going down. This is candle number 1. So if we catch the move, we could be in a trade for an hour and a half, something like that. And certainly it's nice to catch a trade when a new market direction begins developing, which seems to be the case in the 15-minute time frame. Now, for us to take this trade, we're going to rely on the edge time frames on the top, which are the 2-minute time frame combined with a 610 share bar and combined with a 377 tick chart. But we want the UFOs to be aligned with 5234. So that guy is aligned. 33 to 35 certainly envelopes 34. This guy doesn't. And this guy doesn't either because 32 is above. Okay, but the UFO below the UFO on the left does. So that UFO is located at 32 to 35. That one is 32 too. Okay, well, price is already inside the UFO actually. We may miss the trade. Yeah, so okay, so let's go for it, guys. Okay, price is right there. So I need to find a target. I may be late to the party here because I didn't get my target yet, but let me see if I can find a target quickly. Okay, well, I'm looking at UFOs on the 15-minute time frame. We don't see any green UFO, which means that there is a great potential for crude oil to continue falling for an extended period of time. But this is intraday trading. So what I'm going to do is I'm going to have an exception, which is I'm not going to use a target. I'm just going to trail stop, trail stop, trail stop. Okay, so let's go for it. I'm just going to place my entry at, we said 32. I'm going to go with 2 contracts. Stop is going to be 36. Oh, wait a minute. That's okay. Yes, perfect. So 36 is where the stop would be. Safety target would be located at 30. Okay, and the final target, I'm going to cancel it. So I did this at the speed of the light because obviously price is inside the UFO. I don't want to miss the trade. But let me explain, okay, because that was a bit too quick. So we have the entry where the UFO is. Stop is above. And safety target is located at the same distance below. That safety target is there for safety purposes. We entered this trade with 2 contracts. You could have entered the trade with more or less, real money or paper money. That's obviously your decision. I did with 2 contracts, and when it gets to 52.30, I will get rid of one of such contracts. Okay. Bad news, by the way, the red UFO is gone, which means that the app understands that there are not more on-field orders left. Okay, so now we are relying on the EMA, relying on the climate. Okay, so we've lost some odds in our favor right now, but hey, that's part of trading. We're gonna stick with the trade. We are professional because the climate is in our favor. Remember, in a down climate, typically sell on-field orders are added and buy on-field orders are canceled. So it's not like this is a crazy thing to stay on the trade. We're just going to stick with the rules and stay with the trade. I need to talk about time stops, though, which I'll do in a minute. So I was saying that we entered at 32, stop is 36, okay? We have our safety target at 30. So if we reach the safety target, we'll get rid of, we just got stopped out. So if we had reached 30, we would have closed one contract, and then we would be out of risk and now ready to ride the move on the way down and see how far it goes by trailing stop, trailing stop, trailing stop, since we didn't have any green UFO anywhere close by in the 15-minute time frame below. Okay, but we got stopped out. Okay, so this trade is a trade that ended up as a loss. Not a big deal, but certainly time to move on into another opportunity because right now is no time to trade. I'll do one more comment before we go. Okay, and I see, Joe, your comment there. Back to you in a second. Notice that we got an update on the climate. Now instead of 1 dot, we got 2. So the climate is still down. Okay, the EMA is still 52.35. Actually, it's just a little higher. And therefore, it's still an okay time to trade. But we don't have a red UFO at this moment in time. Okay, so the moment a red UFO shows up here, okay, lining up, okay, with the value we're looking for, which is 52.35, which is here, okay, we'll be ready to take the trade. But we don't have it yet. Okay, this could happen anytime, by the way. We've seen that many times, especially in the time frames in the middle and the right, which is share bars and tick charts. Those time frames are not depending on time. So any moment you can have a UFO that plots, where the time frame on the left is time-based, so you will need to wait, a few minutes for the UFO to show up. Every 2 minutes you may have a UFO. So while we just got stopped out, we may have a UFO show up, and we are back to re-enter the trade with crude oil, ready to collect a profit. Okay, so make sure your emotions are not impacted just because we got stopped out. Now, next thing you know, we're not going to trade crude oil today. Why would you do that? Okay, so if your methodology gives you green light to take the trade, we are ready to go. If the methodology doesn't, then we don't. In this case, we don't because we are missing a UFO that may form anytime. So I'll come back in a minute to double check this. In the meantime, I'll check gold, which I never had the chance. Okay, and with gold, what we have, so let's begin with the climate. Okay, and I'll do that, and then I'll take a look at your question, Joe, just to not to miss this trade. So what do we have? We have a confirmed climate. Okay, so it's thick and blue. So this is a confirmed climate to the upside. So we want to be buyers. And statistics are pointing at 5, where we've been 5 candles into this climate, where statistics suggest that this type of climate tends to last 5 to 6 candles. Remember, even though this is a very small decimal place, I always round up. Okay, so that would be 6. So 5 out of 6 means that if we enter the trade now, we can enjoy 15 minutes in the trade plus another candle, that's another 15 minutes. So we may enjoy a 30-minute plus trade if we were to find an entry right now. What do we need to find an entry right now? Well, we need a green UFO located around 35.3, okay, which is somewhere here. No UFO on here. 35.3, no UFO on here. And right here, there is a 35.3, is actually right here, but that's the end of the UFO. Okay, that's the extreme, and the current price is 36.7. So if price comes down just a little bit, right? If price comes down just a little bit, it's gonna touch that UFO, okay? And you would think that you would want to enter the trade, but if price comes down a little bit, guys, you tell me what's gonna happen to the moving average. And remember, the M stands for moving. Well, it's gonna move down, and probably it's gonna be pointing at 35.2. which that would be outside of the UFO range, and therefore, mechanically speaking, we are not going to take the trade. Okay. Now, 10 minutes from now, 9 minutes from now is going to be 11:30 in New York. So what may happen? Okay, what may happen is that the EMA updates, and now it becomes 35.6 or something like that, and now next thing you know, that UFO becomes valid. But right now, as we speak, it is not. So patience is needed. Always as traders, but specifically with gold, we are in waiting mode. So patience. With crude oil, we are in waiting mode for a UFO to form. That hasn't happened yet either. So we are in waiting mode. So I'm going to go back to the radar screen, see if I have an opportunity, which I do with the ES. Okay. So Joe, if you don't mind, I'm just going to ask you for a little bit more patience. Okay. I'm going to move into ES. Okay, and see if we can find a trade and execute it, and then I'll look at your question. So that way we maximize the efficiency of our time together. So loading the S&P, okay, here we go. So what do we have from a climate point of view? Again, same story, mechanical approach to trading, no emotions. So we have thick and blue. This is an up climate. We've been in this climate for 3 candles. Statistics suggest up to 5. Remember, 4.02, round up to 5. So 3 to 5. So we can still enter the current candle plus 2. So that's up to 45 minutes in a trade. And therefore, we are happy and ready to go long the S&P around this price, 3764.5. Okay, so 3764.5 is more or less here. Okay, so no UFO here. 3764.5. Here we go, right there. So that one, it's valid because the ending place is a bit lower. And 3764.5, it's here and there is nothing. So we do have a UFO and price is inside. So I may miss the trade, my friends, we'll see. That would not be the best thing, guys, but that's what it is. That's the time where I loaded the chart. In any case, take a look. We are inside of a red UFO on the 15-minute time frame. And that means that we need to exercise caution because at any moment in time, price may drop. Okay, now price has been there multiple times, so many orders have been filled. Actually, notice how the red color of this UFO is light red instead of dark red. So what I'm going to do is I'm going to look at the inner circle, and I'm going to set the inner circle as my target, and therefore my target is going to be 3769.75. Okay, so 69.75 is going to be my target. So 69.75, which is not too far, to be honest. Okay, 69.75. 69.75 is right there. Okay, so it's not so far. So this is not the best trade of the year, but certainly reward to risk ratio should be there, especially if we enter down and 64.50, where the inner circle is, which is where the greatest quantity of unfilled orders are there. Now, the EMA is just a bit higher than that, so I don't want to miss the trade. So what I'm going to do is I'm just going to enter at 65.00, okay, with a stop located at 63.5, okay? So let's place the order and then we'll explain the whole thing. So we're going to enter at 65 with 2 contracts. Stop is going to be 63.5, okay? Meaning that safety target would be 66.5, and then we say safety target is going to be 69.75. Here we go. So now we can see the trade on the screen. So let me explain the trade. Okay, let me explain the trade. I will get rid of this line as well. So what do we have? Okay, well, the climate is up and is confirmed. Statistics are giving us permission to take the trade. The reference point we want to use for our entry is that EMA where price reacts often to it. And that's because that EMA is a source of potential unfilled orders to be added in the marketplace. But also we want to enter if not only there is a potential addition of unfilled orders, which is the EMA, we also want to enter when there is evidence of unfilled orders already available, which is our UFO here in the middle chart. So that UFO is right there. We could enter at the current price, it would not be wrong because that's the UFO. But given the fact that the reward to risk ratio of this trade would be very poor if I do that, because the target is quite close, and given the fact that the EMA is much lower and it does coincide with the inner circle, so I went a little bit, let's call it stingy in a healthy way, to buy at a lower price. And I set my entry to be 65. Okay, so 65 is the entry. My stop is located below the UFO, which is 63.5, and this vertical distance is being projected above to set what my safety target would be, where I would scale out half of the position size to basically end up with a risk-free trade, and now just manage the trade, trailing stop, etc., until potentially reaching the final target, and then the trade would be over. Okay, so that's the trade that we got in front of us. It's a quick one. Distance to stop is quite near, to be honest. So, again, those are active trades that, if you are executing this type of trade as a trader, you should be ready to take a bunch of those per day. You should be ready and expect that a bunch of those may be stopped out as well because the stop is quite close. But you should also expect that when it goes, you should reach safety target very quickly. You remove the risk, and now you can take 2-3 trades in parallel because you remove the risk of the trade very quickly. Now you're just managing the trade towards the final target, and in parallel, you take other trades. So this type of trading is active, and if you are new to trading, maybe just a bit challenging to the mindset, but certainly if you get used to it, it's quite powerful in the sense that, every day will be different. You may get the first trade of the day, maybe a profit, so it's a great way to start. But let's say the first, the second, the third trade are 3 losses in a row. That's not so nice, but then you get into this profitable trade, and the moment you get to safety target, you can now add more trades. You may find yourself, if you are active, running 2-3 trades in parallel, and you end up the day very, very happy. Again, I'm talking about active trading here, guys, okay? Remember what I said before. By the way, we are 1 tick away from the entry. Remember what I said before, and I know I'm talking a lot and fast. You could execute the trades following the same protocol, the same philosophy, the same everything, using the 60-minute climate or the 240-minute climate. You saw it on the red screen earlier, isn't it? I think I said red screen. Did I say that? So you saw it earlier, isn't it? And that would be the same model, the same process, the same thinking, the same rationale, but everything would be slower. Everything would take more time. The distance to the targets and to the stops is going to be more. By the way, you may consider executing these trades with micro E-minis instead of E-minis because you also have more risk given the fact that the distance to the stop is more. So you can mitigate the risk by reducing the size, and that's done by using micro E-mini contracts instead of regular E-minis, Okay, so let's see what's going to happen here. And in the meantime, as we are waiting, I'm going to take a look at Joe's question. So besides 15-minute chart, does AutoClimate work on any time frame, any tick, or any share chart? Yeah, any really the work, the analysis that is being done applies to all timeframes. It's all about which timeframes you decided to have in your trading plan, Joe. And that has a lot to do with your style of trading, and that has a lot to do with the amount of money you have in your account, because the larger the time frames, I just said it, the more the risk per trade. So you need a larger account to trade. The lesser the time frame, the lower the time frame, the smaller, the tinier those UFOs, so the lesser the distance to your stop, so you can trade more contracts. So again, you can trade more contracts and you have less risk. That's what I meant to say. So again, your trading style depends on your account size, depends on the time of the day at which you trade, how active you want to be, how many trades you want to take per day. Are you happy managing multiple trades at a time, or you want one trade a day per day only, and that's it? So all of this is a very personal decision. And once you have decided, let's say in your case, you're going to apply AutoClimate to the 120-minute climate. Let's say that's your case. So the 120-minute chart, right? So if that's your case, then of course I would recommend, as always, to do some back testing, some going back in time and see how your methodology would perform and behave. So that way you can measure what is a realistic goal to set for yourself. So every time you end up a trading day, you know if you have done well or not based on how you feel, based on what you want or you would like to, but based on what's possible, because you know what to expect from your methodology, which also will help you to keep your emotions cool and under control. If you don't know what to expect and you get a profit, you may get euphoric. If you get two profits, you're jumping on your chair. And if you get three losses in a row, you may stop trading for the week, where the fact is that maybe it's to be expected, depending on the market that you trade and the time frames. Okay, so long story short, backtest it. Long story short, it does apply to all time frames. It's all about the one you selected for your plan. In my case, I'm using the 15-minute time frame here. Joe, to clarify, if I added the AutoClimate indicator directly to the three other charts you show, can I use the result to trade off that particular chart? Well, yeah, you could. Just like if you were to choose to use one time frame only, okay, and you were to do everything on that one time frame, you could. If you were to choose to use 10 time frames per trade, you also could. But what are the implications? Okay, well, if you were to use 10 time frames, you make your trading very complicated, and it's already difficult to get a go ahead, meaning that all your rules are met and you are ready to take the trade. If you were to add so many time frames, getting a go ahead for every one of those time frames and get the green light for you to take a trade is going to take sweat and lots of waiting time. So probably it's a bit frustrating. And then you see many trades you could have taken that you miss, and you may not be too happy to be too over perfectionist. Okay, and I'm making this comment because I am a perfectionist. So I had to learn to not to be when trading. Okay. On the other extreme, if you were to use one time frame only, I would say that you are not filtering enough, and you may end up executing too many trades, or only executing trades when the market is in very extreme conditions, which may end up amazingly well some days, or may end up terrible other days. So I would say 2, 3, if you are perfectionist, up to 5 time frames, I would say it's okay. More than that, I would say it's really going too far. And 1, I would say, is too little. Okay, I would say minimum 2, because in our survival to mastery course, for example, we always talk about this analogy about a doctor doing an X-ray to your shoulder or to your knee if you were to have an accident, and would they take only one X-ray from one angle, or would they take multiple angles, right? So normally they will look at it from multiple angles, and that's what we are doing. Okay, with the methodology, we use the common time frame to understand the climate based on everyone out there in the world. That's why we use the common time frame. We don't use tick charts that no one watches, only computers and us, right? So we are running AutoClimate in generic time frames. Okay, so we understand what others see, and we want more people to buy after you bought, we want more people to sell after you sold, for the market to continue. You can see here it seems that we missed the trade, okay, by just one tick or two. That's trading, my friends, but you can see now how there is a nice push. Why there is a nice push? Because in a common time frame you have a defined climate, meaning that there are many people attracted to buy. If you were to apply AutoClimate to a tick chart, would it still say something useful to you? Yes, because it's based on statistics and probabilities, and that's always useful. But it would not represent, because it's not a common time frame. It's just it's a weird time frame that only a few we use. Um, it would represent something that has less meaning from a point of view of continuation. Okay, so you probably remember, Joe, and I'm not sure in your case, Joe, if you have taken our course or not. But for everyone out there that has taken our courses, so in the courses we talk about the concept of common timeframes and why we use common timeframes. So trying to find more people to buy after we bought, trying to find more people to sell after we sold, so the moves continue, so we reach our targets, right? And then we talk about the concept of being invisible when we enter, because for you to buy, someone has to sell to you. For you to sell, someone has to buy from you. And that's when edge timeframes come into play, which are timeframes that are not so common or not used by so many people. And all of those things that we discuss in the courses, okay, to try to add odds to our favor. So could you create variations of everything I said based on any other rationale that makes sense? Of course you could, okay, but then to evaluate properly if not only it makes sense but actually it produces the desired results, again I'm back to my recommendation of going ahead and doing some backtest to make sure it works, and on top of that you know what to expect, so you keep your mindset cool when you apply it, because in the end you may have the best methodology in the world, but who clicks the button, right? So we need to manage our emotions, and understanding expectations is absolutely key. Great. Well, very, very lengthy explanations here. I'm taking my time. Today is a market holiday, or market with less volume, however you want to see or call it. And I'm kind of doing a trading session mixed with a lecture session. Okay, so hopefully this is useful. Joe, let me know please on the chat box if this was useful to you, and if it was not clear enough, or there are other questions that arise out of thinking about what I just said. Feel free to type them. Okay, you and everyone. And by the way, if you guys are watching this recorded, okay, which many of you do, because people are busy, and we understand that. So go ahead and shoot an email to support, okay, at okay, I'm having a little problem here with my typing for whatever reason. Oh yeah, interesting. Yeah, something happened to my keyboard. It changed the settings. Not sure why. Okay guys, just give me 1 second. I'm struggling with my keyboard right now. Yeah, actually this is not funny. I don't find my cursor any longer. Oh, that's a weird one. Okay, now. Okay. Okay. So sorry for that. So I was saying that support at TRADDICTIV.com. That would be the way to go for you to get your answers. So if you're watching this recorded, don't be shy. Shoot an email. If you are watching this and you're like, wow, you know what? But I have this question, or I use fibs in my trading. So how do I combine the fibs with the UFOs? You name it, whatever. Just count on us, and we'll be happy to help. Okay. Talking about helping, just for you to know, January 30 to February 5, we're running our next Forex course. This one is a live exclusive. Okay, in our website, you can subscribe to courses which are on demand. So you can just watch videos at your own pace, and that's it. This one is not like that. This one is a live exclusive. So that one has specific dates. It's a 7-day course. We start on Saturday, we do the weekend, and then we continue Monday to Friday. So if you're interested, just come to our website so you can subscribe to it. Okay. Cool. Okay, so let's take a look at what's happening with gold. So yeah. So okay, let me look at crude oil first. Okay, great. So let me see the time. Okay, we got a little over 5 minutes. So a few comments, guys. First, while we plan the trade and we put the order in, the clock has ticked and we passed 11:30. Okay, we are on the way to 11:45 New York time, which is when we're gonna have an update on the climate. Okay, so notice that here when it comes to the climate, we had a 4 out of 5, and we are still looking at those same values. So we are still looking at 37.65, which is still lining up with that UFO. So to be honest, even though we could have been in this trade and reach already safety target, if price comes down, the UFO is still on the chart. Okay, even though you could have taken the trade 15 minutes ago, the UFO is still in the chart. So if you missed it, it's okay to leave your order in and get back in later on because the UFO is still there. If the UFO was to go away, like it happened earlier with the crude oil, then you would need to come here and click cancel. Okay, but it's not the case. So the trade with the S&P is still valid, is still there. I'll come back later before the session is over and see if we got filled or we didn't. With gold, we have another lesson to learn here. So first, notice the stats. So what happened? We had an update, okay, on the 15-minute climate. It's still the same climate. Okay, so that market keeps pushing, keeps progressing. The climate is blue and the dot is tick. So it's an confirm up climate, so time to go long. Okay, but what's going on here? Well, statistics are telling you that you are already in candle number 6, where statistics say that a normal thing to happen is 6 candles going up. Now, a normal thing to happen is 6 candles going up, meaning that if we get to candle number 7, number 8, then it's not a normal thing to happen anymore. So we are now falling into the territory which is less probable. Could gold keep going higher? Yes, but now it starts becoming less probable. So a wise choice would be to stop being interested on executing trades on crude oil until there is a climate change and it becomes red. And then we start shorting, and then if it becomes blue, then we start going long again based on whatever probabilities show. But right now, it seems that this market is more likely going to stop and reverse at some point, or at least have a pause, and not to continue. I mean, we have seen cases. Look at that right here. We have seen cases where statistics say 6 is what's normal, and look at how many dots we got in a row. So those are very extended moves, which are out of what probabilities would suggest. That sometimes happen, and if it happens, then it happens. But certainly you don't want to enter when, statistically speaking, you're late to the party, while the party could last longer. Okay, and that's what's happening to gold right now. So I'm not going to be interested in planning a trade since this climate, statistically speaking, is basically over. And maybe not, but statistically speaking, that's the case. What do we have with crude oil? Well, with crude oil, we have a different scenario. Okay, different scenario. So what happened is that we were planning on this trade on crude oil when the climate was blue. Okay, and we got stopped out, and we got stopped out for a reason. There was a change of climate. Okay, but then, and this may have to do with the fact that today there is little volume in the market, little trading, but the climate went to be down, to be unconfirmed, to be back to be blue. So no trade. Okay, no trade, and if any, we are back to be interested in going long, but for that, we need a UFO to form around 52.36, and we need that UFO to be green color. So if a UFO forms somewhere here, then we'll be happy to re-enter crude oil, planning on a move to the upside, catching it and riding it. But again, one more time, we need a UFO for that, okay? So we don't have it. So what do you do when all of this happens? Well, you are in waiting mode for those markets. Ideally, at home, you have a few computer screens so you can watch it more easily. And in the YouTube channel, of course, I can only share one screen. So, that's why I'm using tabs in the bottom part of the screen. But then the other thing you could do is just come back here and see what else is available. Okay. And here you can see, for example, the Russell index. Okay. It's giving us a near hopeful opportunity. Okay. So it's hopeful. So we're not going to take it. But just to illustrate my point and show you why we're not going to take it, I'm just going to load the chart so we're going to see it, and then I will look at Luis and Joe's question, and I think that we will then after that call it a day. Okay, so I'm loading Russell RTYH21, and take a look at why taking this trade it's not recommended based on probabilities. AutoClimate is telling us that why the climate is up and confirmed, is blue and thick. That climate has been running for 13 candles, where statistics suggest that the normal thing to happen is 6. So in other words, we were expecting 6 dots. That would be a normal thing to happen, and basically went all the way to 13, which is like more than double. Okay, so this is a very, very, on one hand, very powerful market, But in the other hand, it's what's more likely to happen here is maybe the market come down and we have a down climate, and you could take some trades on the way down and profit from that. And then the market may come to these UFOs and then turns and redefine a new up climate that lasts for another 6 candles. And then you can take another trade there. Okay. And by the way, here we go. This guy just formed. Okay. So now, do I know that for sure? No. Again, probabilities here are being broken, clearly broken, where statistics suggest that the duration of these climates should be 6 or up to 6 is the normal thing to happen. It went all the way to 13. So there is kind of there is a little bit of not normal behavior, if you wish, in this market. Okay, S&P, what's going on? Not much more. You know what? Let's take a look at one thing. In 3 seconds, we're gonna have an update on the EMA, which is 65 still inside the UFO. So the trade is still valid. Okay, even though we got the update, the UFO is still there. So it's all good. So I'm gonna leave the trade in. Okay, but we're gonna conclude the session by looking at the questions on the chat box. Since we already hit the ending time of the session. Okay, so I got Luis Quintero here. How are you, Luis? Hello, what happened if the 15-minute climate is up, but the 1 hour is down, and we have a near sensible alert in the 15 minutes we can get in the trade? Well, again, it's all about your trading plan. If you were to, as I said before, use many time frames, and you have contradictory information, which could happen, okay, especially when we are in choppy markets and things like that, then basically that will stop you from trading. Okay, you should have a rule that says, well, this guy is telling me to buy, this guy is telling me to sell, so I better do nothing. Unless on the 60-minute time frame is telling you to buy, but just like the Russell, statistics are totally exhausted. Okay, statistics are totally exhausted, and the 15-minute time frame is already telling you to sell, meaning that the down climate that is about to start on the 60 minutes can already be seen on the 15. So then, you could have a rule like that, and certainly you could implement it this way, and it would be valid and probably very powerful. But you would also miss some trades that you could have taken, right? So if you were to focus on the 15-minute time frame only, probably you could have taken some trades on the way up, some trades on the way down. And again, would all these trades be amazing? No. Some of them may only reach safety targets. Some of them may only give you, a 1 to 1, 0.5 to 1, 1.5 to 1. But, you are active, and then one of those may give you the whole move. And because we don't have a crystal ball, we play probabilities, but we don't have a crystal ball. And sometimes probabilities are not met, like for example here. So in my trading style, and this is just me, you don't need to do exactly what I do at all. But in my trading style, I prefer to be in the trade, ready to enjoy whatever is going to happen, than looking for the sky and the moon and the sun and the stars, everything to line up, and have so many time frames confirm what I would like to see. Because while it's powerful, basically you are missing so many trades, and then if the one trade you took stops you out, the frustration may be too much, and it may bias you to stop trading for the week or get upset and trade in revenge mode and things like that. And depending on your experience and kind of like management of emotions, some people are very emotional, some people are less. So to some of you, that may be challenging. Okay, so could you do what you suggested, Luis? Yes. Does it make sense? Definitely. Does it have pros and cons like any other combination? Yes, because trading is not a sure thing. Trading is all about putting a set of rules in place that adds odds to you, and each set of rules will have different pros and different cons. So you need to understand the pros and the cons by doing some backtesting, so you understand what you got in your hands. So when you execute, again, you understand that whatever result you get, you understand if it's within normality or not, and therefore the impact in emotion when it comes to emotions or setting realistic goals, is not going to be great, and therefore things are going to be under control, instead of you have this huge emotional impact, and next thing you know, you're out of control in all ways. Okay, so long comment, very good question, I love it. But remember, many times in life, I would say almost always, okay, and that was a very, very tough lesson for me to learn, because I am a perfectionist based on my genes, okay? But I was going to say that many times in life, almost always, less is more. So make sure your methodology is simple. Don't make it too complicated looking for perfection. There is no such a thing. You'll get stop outs. Uh, Everybody's different, but I personally prefer to get stop outs and be in trades because then I catch the good one instead of, because I'm looking to not to be stopped out, I keep missing the good one. And then if I get in, sometimes I get the profit, but when I get the stop out, I get so frustrated because I miss so many trades that were good, and the one I thought was the best stopped me out. Okay, so careful with that. This is a little bit of an experience I had myself in my early stages. Not fun, and most importantly, business-wise, not that lucrative. Okay, so don't be too perfectionist and then backtest whatever you do. Joe, on the 15-minute chart, should the 9 EMA be set to change tick by tick or every 15 minutes? The number of changes extremely quickly on the futures like NQ, just about every second. Yes, I get you. So again, could you go ahead and be a bit more in the passive side and set up your EMS to update once per candle? Yes. Is it wrong? No. No, because while the ticks will change the EMA, normally, unless you have a crazy day or a crazy move, normally one candle will not impact the EMA by that much. And most of the times, the EMA would stay in the UFO or close by. And since you have a stop, so let's say one day is not the case and you get stopped out, so it's one day, so it's fine. But again, for the ones of you that are watching, that are doing trade management, that are active, so it is indeed more precise to have the EMA update every tick. And since a lot of those on-field orders added by the EMS are added by computers, so the computers are not looking at the prior candle close or the current candle open or something like that. They are looking at tick by tick. So I personally prefer to do it tick by tick. Now, could it be that you are a trader who work in an office and you only have time to watch your chart, 3-4 times a day when you're in the office, and tick by tick is a bit too much? Yeah, I could understand that, and it would not be a big mistake. Again, I'm back to what I said before. If you're gonna do it, just make sure you practice for a while so you know how it works, you understand the implications, and compare with tick by tick versus one time per candle, and understand the differences, and put rules around it and trade it. Okay. Very good. Winaldo, hi Jose, how to get a red screen like yours? Thank you, my friend. Love you all, my friends. Love you, Winaldo. That's very sweet of you. Yeah, it's very simple. I have it set up. So one thing you could do is send an email to support@tradictive.com and we'll send you the workspace. So you have it. But another way, which is probably even faster for you, is you go to apps, okay, on your TradeStation. You go to trading app store updates. Okay, so you go to the store updates. Here's your AutoUFO, here's your AutoClimate, and you have a launch button. Okay, so the launch button launches a ready to use standardized workspace. Okay, and that guy is with stocks. Okay, but it got already a red screen with the AutoClimate all built in here already. So what you could do is just take that workspace, delete the symbols, okay, and just type whatever you trade. Okay, so if you trade the yes, just type @yes, and now you're ready to go. Okay, and you already have all of those things here. Then you just select the time frame that you want to use for your trades. Let's say 15 minutes, and now that's it. You got the 15-minute time frame for the ES ready to go. So probably that's the easiest way, and then you can, of course, you can move that window, right? Okay, you can even go ahead and copy the window, and you can just go ahead and paste it somewhere else. Okay, and then you can organize your workspaces however is best for you, given your preferences. Okay, worst case, shoot an email and we'll send you the one I use so you have it all ready to go. Thank you so much, Luis. Leland, very nice to see you. Very nice. I didn't know you were with us today. It's good to see you. My friends, I extended the session by additional 10 minutes. So, not that I mind, I love it. At the same time, I do want to be respectful with everyone's time. So we're going to say bye now. You guys keep up the good work. If today we are taking it easy and today you decided to not to trade, good for you. It's fine. It's all good. Keep up the good work, and certainly count on us in your development. If you need anything from us, the apps, support, questions, answers, whatever, just shoot an email and get in touch, and we'll be there for you. Everybody, you guys take care. See you soon. Bye bye.